in formally a welcome from BBG South. On behalf of all in the committee, I'd like to extend a good start and a warm welcome to 2021. We thought we have seen the worst last year, so we are looking forward to a better year ahead. However, having said that, news around the world isn't particularly bright. We just spoke about UK and this new variant of COVID-19, which is creating so much of havoc. 2 months ago, nobody would have expected this in Britain, but look at how things have changed. So drastic that one of our attendees told me London looks like a war zone and a ghost town. So this is very unfortunate. The other part closer to India is China. So China is not reporting full numbers. It is again exploding. I think they've got cities as far north as Beijing and as far down south as Hong Kong and Shanghai. So the biggest worry naturally for India is not to bring in any of these new variants, which is exactly how they started in the first place sometime in March last year, right? Prakash Chala has been kind enough to share with us daily data. So we are all keeping our fingers crossed. But we need to move ahead. The good thing is in the UK, vaccination has started in a big way. They're probably the largest to go on board with the NHS. I was told 7 million vaccinations done to date, all right? And they're prepared for it through the NHS, though the NHS has challenges. Here in India, we have got our own protocols for the vaccination. I think all the frontliners, healthcare professionals have already started. Naturally, being cautious, we are all waiting for feedback from our friends in medical service to tell us they are still alive and kicking before we take our dose or we line up for our shots when it comes. We have a simple agenda today, basically two. Representative from BDHC couldn't join in. Paul Dryden sent a message to Ravi, so I will get Ravi to tell us what Paul Dryden wanted to convey on behalf of BDHC. Ravi, over to you.
Yeah, he sent an email. I'll read out. Sincere apologies for the late call-offs from the BDHC, but unfortunately, none of us were able to attend tonight. The highlights which can be read out are as follows. Mr. Alex Ellis, British High Commissioner to India, arrived in the post as in Delhi on 21st January. No news yet when the High Commissioner will visit Chennai. On the vaccines front, as of 26th of January, UK had vaccinated 10.2% of its population. That's about 6.8 million, including some with the second dose. But sadly, the death toll passed 100,000 mark yesterday. The rate of infection is falling, but still stubbornly high, with the new variant more infectious than the original. On the lockdown front, all 4 countries of the UK are in lockdown with no firm date of relaxation. On the flights, British Airways is still to announce when the flights will resume to Chennai on London-Chennai route. BA flying to Bangalore and Hyderabad 2 to 3 times a week without issues, allegedly at a very high occupancy rate. UK TEP Chennai, all sectors at office, healthcare, renewable energy, advanced engineering and manufacturing, posting very strong gains in the financial year 2020-2021, exceeding their targets. Inward investment team is also exceeding their targets. Thanks and apologies for not being able to attend the meeting. Paul.
Thank you, Ravi. I'll come back to you later for the other slot. Words from the chairman, I'd almost forgotten. Christy dictated a few lines to me, so I will not be doing my duty if I didn't read out what he said. This is him saying, after 5 cancelled return flights, obviously British Airways, because I knew, I'm pleased to return to Chennai via Delhi on an Air India flight. And after 50 days of being on home vacation in the UK, it was a very pleasant and relaxed change. As always, I kept reading, and that kept me occupied. So you know him on his books. He read something called The Scripted Isle from the BBC series by historian Christopher Lee on how Britishers were created. And then he adds, the eventual release from Brexit was a great relief. However, it has now brought much disappointment overall in the country. We'll hear more about it a little later. Despite all the criticism and challenges, the NHS has delivered some 7 million vaccinations to date, and I was one of the recipients of the vaccine. They are targeted to reach 15 million by the end of February. That's Christie's words in a gist, all right? I'm not going to invite Ravi to tell us a little bit about this subject called the EU-UK trade deal after Brexit actually happened. To be fair, while many of you know Ravi, I just want to say that Ravi has parked himself in the UK for more than a year. He's been very diligent. His entire family is there in Manchester. Not exactly an easy time for him. Ravi is also a serial entrepreneur, having had his interest in many businesses. So naturally, the impact of Brexit actually happening and then the outcomes of it is something that will be close to his heart. So I'm not going to invite Ravi. What we're going to do is I'm just going to put across to him 3 pointers, that we discussed. So firstly, now that the UK has effectively exited and a trade deal was signed with the EU, what has really changed since the 1st of January this year, Ravi?
Thank you, Vijay. See, essentially from 1st of January, from a common man perspective, from a businessman perspective, I think, what we see, I think as Christy said, I think, there are the impact of this is actually being felt, right, by the people. I mean, say so even during the lockdown, if I go to a supermarket and look at the shelves, right, and they would all be full of goods, like, particularly the fresh vegetables. If you go to supermarkets now and you actually see the shelves are not as full as they used to be, that's kind of telling you something. And people are also actually see the prices of, the produce, which, traditionally used to come from Spain and places like that, has gone up. Even though there is a trade deal, which is not supposed to put any tariffs, but I think the cost of bureaucracy is actually starting to play out. That's something which you visibly see in the country. And I think, that's, common man, hands in their pockets will actually, beginning to see that. One thing which is significant, I think, however much people kind of heard this before, the free movement of people and the goods and services between UK and the EU, that has ended. That means, a significant difference in terms of how people live, how they travel, how they work. This is something, lifestyle point of view, that's definitely a visible change. Because of COVID, I guess people haven't, quite felt the impact on work and travel, but certainly on the ways of living, it's starting to show. I mean, things like, you can't just pick up your, people used to be able to travel from here to the continent by taking your driving license. But now that's not possible, right? You have to take a passport. And, that's something which is kind of visibly a change for people to kind of see that. And people used to kind of pick up their pets and then go to Europe. But now you need a pet passport. You can't just go take the pet and then go there. You can't just load your, because here, you see pretty much all, all people have is a dog or a cat or something at home. So that you see that lifestyle kind of changes. And from people who are traveling, one of the things you would notice is between Europe and UK, there was no duty-free shopping, right? Because duty-free was outside Europe, because you're all in a common. So you visibly see that duty-free now is actually returned. So now you're actually duty-free shopping in routes, and that's something people actually notice. So if you want to move to the UK citizens wanting to move to the EU, or the vice versa, there are some protections, particularly sectors like, healthcare, particularly like the financial services. There's a lot of people who work between Europe and here. So whilst there are provisions, but it's a more bureaucracy. That means that you have to obtain resident permits, which is actually visible. People kind of, even though they, some people thought it was easier, but now you have to fill the forms, you have to get the applications, that whole process, for people have forgotten, because when they do between these two countries.
So which brings us to the next issue, really. What do you think are the major areas as far as trade and businesses that are covered specifically under the deal? Because this deal is between UK and EU. We are not yet talking about rest of the world. So
yeah. So I mean, this is something which is quite interesting. Even though the trade agreement talks about EU UK trade cooperation agreement. But as the word says, it is actually Brexit. So I think a lot of people kind of, now it's only dawning on people that this is the way, as Peter said before, the way Britain is treated, from Northern Ireland, the Great Britain of 3 countries is, the rules are slightly different to the way the Northern Ireland. So Northern Ireland is, typically, effectively still following the rules of European Union, and the other 3 countries are the ones which are covered in the cooperation agreement. And the cooperation agreement has, 4 major pillars. One of the pillars is the trade, economic, social, environmental, and fisheries. That's kind of a more like a one bucket. Then the other pillar is the security, citizen security, how the 2 countries will cooperate. And also the connectivity, the sustainability, and the shared opportunities between the countries. And the governance framework, so how they are going to cooperate. If you cover the free and fair sustainable trade, so that covered extensively in terms of what goods, including the customs and regulatory cooperation, is going to work. The services and the investment is going to work. And data transfers, particularly the digital trade, intellectual property, and the public procurement rules. Before, if you want to buy something over £100,000 in the UK, you have to do an advertisement, across Europe, right? So that's, European journals. And so there are basically rules for fair competition and sustainability. They are actually, defined. But a lot of this is theory. And I think now, when I talk to friends and colleagues who are in business, they're experiencing how difficult it is to implement some of these aspects of it. The other one, there's a cooperation agreements on connectivity and shared opportunities, particularly around fisheries and natural resources. Who can fish in what waters and how long for. I mean, energy used to be traveled freely, right? Because there was cables between UK and Europe, and effectively you can buy energy produced in Spain, and you can contract, for consumption in my house here in Manchester. But that's no longer possible, So again, there are, block rules. The security, anti-money laundering rules, protection of fundamental rights, the GDPR protection of the rules. I think, the lawyers on the call will, probably know, more specific details when it comes to law enforcement, judicial cooperation, particularly in matters of, criminal matters. So all of that is documented. There are potential, unilateral measures, right, in the EU. These are the kind of sticky points which are, still yet to be negotiated. The whole financial services is out of this deal, right? So, what happens? Equivalence on financial services. That is still being negotiated. That is in the small print. It's overall, I would say, quite a challenging agreement. Whilst it's been written by bureaucrats, the practical implications of this, I think we are going to find out in the next maybe 12, 24 months, because there are consequences. The way Europe has portrayed this is UK's choice to leave. And Europe has portrayed a version of this saying that what are the benefits for them. And the UK has, if you read what the UK Prime Minister has put out there, I think it portrays a slightly different version of it.
Right.
They basically put two versions of the same document, even though they negotiated for years.
Yeah. So I agree with you. There's quite a bit of ambiguity because each side is portraying it in their way. So it's still part political and then part the administration part of it. So it's still early days. It'll probably roll out. But now we come to the interesting segment on the at the ground level. So I'm going to use a simple analogy. I saw recently the media something which we would have never imagined to happen in London. Truckers going on strike past 10 Downing Street, making their presence felt, making their issues. If the same thing happened in Delhi, they would say this is India. So what is your own take, therefore, of the good of this, the bad and the ugly components of Brexit? Particularly, I think it affects the small and medium businesses a lot more than big corporates. All right. So this is where the real issue is, and perhaps you can tell us what really is happening and how this is going to be mitigated.
Yeah, I think the trade-offs aren't finished yet. So I think you made a good point in terms of the good, bad, and the ugly. And I think the best thing, and I would say, is the beginning of the end after nearly 5 years of uncertainty, because we're no longer talking about it. Because I think whether something else has taken over, but I think people kind of were fed up with it. I think that's the only good thing that I see. Okay, now the companies they've accepted that they will be facing red tape at the borders. I'm saying this in a positive way, because I think people have now, because that uncertainty is gone, people are now say, okay, this is it, and we're resigned to the fact that this is what is happening. Now, in terms of the goods, they know there is an amount of certainty that they can sell goods to the EU with a zero tariff, and there are no quotas. There is no restrictions in terms of the volumes you can trade, and that is something which is a certainty, and that is good, potentially a good for the UK, and also their ability to negotiate trade agreements around the world without having to consult the EU. That is something which the UK always wanted, and that allows the UK to sign deals with India or other countries, in which is what they were going after. Especially they want a larger deal with the United States, and I think that's yet to be kind of seen. The bad, I mean, I think if you ask me, I would say majority of the UK runs on the income generated around the financial services. Right. There's no two ways about it, and I think that's the London pays for pretty much most of what the rest of the country spends, and not having certainty around that, I would say is bad. I think the Brussels wanting to take lots and lots of it, that particular financial services, and also Frankfurt wanting to take it, and Switzerland want to take it. I think that I would see is a bad thing. The deal between EU and the UK isn't a traditional trade agreement by any measure, in my opinion. I think it's, rather than negotiating better terms and free trade, UK has negotiated freedom from regulation, okay, and maintaining a level of access to Europe, which is very, very different. Even though it's called the trade agreement, and typical trade agreements are, they'll actually negotiate better terms. That is not there in the agreement, and I consider that is probably a bad deal.
I'm just going to pause and say, you talked about financial services. Does this mean the city of London and all its deep operations do not get affected by what has taken place between UK and EU? They still have levity, laxity in what they do, what they continue to do.
I think that's the ugly part of this. Actually, the most troubling and the ugly part of the deal is that the whole London's financial services hub is essentially waiting for a deal. Okay, so it's left in a limbo. So the complexity of the financial services market and the negotiations are mostly focused on physical trade and the flow of the people. But the biggest chunk of this in the financial services, now that gets done is not resolved. So, I mean, they're still talking behind the scenes. The treasuries are still talking. It could, we could probably take another 18 months, before we know what is actually happening. For example, can UK issue euro-dominated derivatives? Will euro let you do it? For example, India can't issue, dollar-traded derivatives, right? We can't do it. And whereas UK had the freedom to be able to do anything anywhere. What if Europe basically says that, euro-dominated derivatives can't be cleared in the UK? You have to clear only in Frankfurt. What happens then? There are tons of questions related to the whole money operation, which are completely outside of the discussion.
All right, one last bit, and then we end this session for now. What about the households, families, man in the street? How much is it going to impact their pockets and their spending?
So this is an interesting one. I mean, there are tons of reports which kind of people talk about it. My personal view, I think everything will go up in terms of anything which we bought. The cost of bureaucracy, as I said, people will feel at least 10 to 15%, out of pocket. This is my personal opinion, which you will see.
Because you live there and you spend there, so you would know best.
Yeah, I think even though it says it's not required. I mean, if you look at it before, I could be doing a trade sitting here in Manchester, right? I'm selling to somebody in, say, Southampton, but buying my product from France or Germany or somewhere. And I can tell the guy in France or Germany, whoever I'm buying from, to ship it directly to my end user, right? Without me having to have a warehouse, right? But this deal won't let me do it, because what it does is that I am effectively an importer. I have to import into my country, right? So that means there is, bureaucracies and paperwork and all of that bound to add, costs. I think the common man will start to see it, pretty much, maybe now the COVID is masking all of that.
Right.
But the thing is that UK is hoping that there will be lots of jobs which are created as a result of it. That we won't see it because of the recession, that's going to hit us immediately after that. So yeah, I think whether it is good or bad, people will kind of judge for themselves in the next 2 to 3 years.
Thanks so much, Ravi, because it's a very complex subject. It's still early days. I think there's an opportunity to revisit this maybe 6 months or 1 year from now, once we go past the current crisis, because it's impossible for the administration to be really multitasking when they have a major healthcare issue. So let's plan to revisit this. And then maybe the next time we can talk about what's in it for India now. All right, because that is what everybody here is going to think.
Yeah, one thing which I would say is, if you look at the kind of the trade body, right? The equivalent of the CBI here, so which is now the Lord Bilmoria, he's heading that, and I think he's pretty positive and optimistic, because of the opportunities that presents itself. I think Vikas kind of shared an invite. I think he's actually chairing next week, for the London School of Economics. That's worth listening,
Right.
His perspective next week.
Look forward to that. Thanks so much, Ravi. We'll get back. Thank you. Now we have to move on. We have next on the agenda our guest speaker. Every month we try and feature a guest speaker on a subject matter that will interest all of us. This month's guest speaker, I have to thank my good friend, fellow committee member, Hemant. Hemant knows Mr. Baskar Babu personally. They were batchmates in the MBA program. So while we have circulated the background, I'll just briefly introduce Mr. Baskar Babu to you. He's the Managing Director and CEO of now Suryoday Small Finance Bank. If you read his background, they started off in microfinancing business and then some maybe 2, 3 years back, they were elevated as part of, I think, 8 or 10 other banks to this new category called small finance banking. Interestingly, he's a mechanical engineer. I think he spent his early days all in Chennai because it reads mechanical engineering from SRM University and an MBA from School of Management Studies in Pondicherry. So I think he's got his heart and root in Chennai, but he's operating from the financial capital Mumbai. More than 25 years of banking and financial services. I think he's worked in all the major financial services institutions, Cholamandalam, HDFC, G Capital. I would now like to hand over the podium to Bhaskar Babu. Sir, if you're ready, please come on, man.
Thanks, Vijay. Thanks again for the introduction. I'll keep my kind of talk pretty crisp, and if there are any kind of interactions, that would be great. Uh, I'll just take you through in terms of where we started, where the scope is, and what the new banks do, and where is the scope for large new banks to come in when the incumbents are really, really very strong and large. So just a little bit of a tilt into history 25 years back, when HDFC Bank was born in the year 1993 or 94, Aditya Puri, who became the managing director of HDFC Bank and started from scratch, a single branch in Sandoz House. If he had told anybody or if somebody told him that in 25 years' time, your market cap will be more than Citibank, they would have thought that no, he's just kind of mad. But things as they would have had a bank which grown in India and still only in India. In fact, overtook Citibank in market capitalization a couple of months back, and now I think it's both $120 billion and $130 billion. So what this really kind of tells us in terms of the banking space is that the banks historically were built for large value, probably low volume transactions. Hence, it was not possible for the banks to look at high volume, low value transactions as profitable or to build a platform. Understanding events and influencing future in my limited understanding we need to look at things in our own limited capacity, irrespective of what we are, in terms of how things were, as they are, and how they might be, and how they ought to be. The moment you kind of get a little perspective of that, then there is tremendous opportunities in anything you do, which is focused at, for lack of any other word, use the cliche bottom of the pyramid. Banking by and large has been a business, at least in India, where many of the customers were made to feel irrelevant. I think the risk across as we really grow and there is a huge divide either in terms of wealth or in terms of income, is that it is not so much in terms of just this alone which creates discontent and discomfort, but I think the substantial feeling of finding ourselves being irrelevant in the overall scheme of things. The overall income tax pays in the country is just about a shade less than 6 crores, many of them almost closer to nil returns, around 30-40 of them. So it means around just 3 to 4% of the population, and probably the working population maybe 6% makes any return. The rest of them, technically by the definition, are excluded from the formal banking system in the traditional sense. But around the market is around approximately around for 25 crore households. So multiply by 5, the population of the country is 140 crores. This neglected small customers coming into the banking stream is not just a benefit that they get. Overall, as an economy, as more and more, many of them get included, there is a tremendous increase in economic activity across the board. If they start taking a mortgage and start building a house, start buying an apartment, then obviously there is a force multiplier which comes into play. We started as a small microfinance institution in Pune 10 years back. The intent was that everybody in our own careers, sometimes when you're working, you want to do something which you want to do, and then the only choice is becoming an entrepreneur. At that point, if we wanted to start an NBFC, it was really not possible. So I kind of met with an investor come investment banker. Then I was to join him as a CEO of IntelliCap, which is a social investment fund. So he said, and I told him that 2 years afterwards, I want to do something on my own. He said, why after 2 years, why not now? It looked little like a joke that you kind of go there and you don't pitch in, you don't have a business plan, and the guy says start, and I will put in the money. And as we are planning to really kind of start, we had the entire financial meltdown, and even mobilizing 1 lakh, 2 lakh became extremely difficult. So we didn't, having put our feet forward, we said that no, we'll go ahead. So then you have hope, it leads to a little bit of courage, sometimes foolish depending on the outcome. Sometimes if it works out, it looks like a well decision. Unfortunately or fortunately, our end result decides the quality of the decision, which need not necessarily always be the case. So as we did, we kind of started getting customers. We did small ticket loans of 10,000 and 15,000. But the question was in terms of financial inclusion is not only giving a credit. You give one credit and you give more credit and they don't end up saving at all, which does not give them financial stability. So we kind of wanted them to start opening a bank account in 2010. We tried everything that was possible, but the bank simply said that no, we are flooded with money. We don't have the capacity to service these small value customers. So we kind of thought that no, one day probably we'll get an opportunity to get all these customers included in the banking system. The banking then was one license, two license every 10 years. And as we kind of kept doing this, then suddenly we had this opportunity of small finance bank, which Dr. Rajan floated. Certainly kind of, a very risky proposition, so to say, to allow people with no big, deep pockets, only backed by investors, to start a bank. It's kind of, the experiment could have gone either ways. So 10 of us, very limited capital, our entire net worth then was only 130 crores. So we all applied. We didn't know how many of us will get a banking. We didn't know what is banking. The way to run a bank, we knew what was banking broadly, but we didn't know what it really takes. So after we all got, some of us were lucky to get an in-principle approval. So we went ahead and then we wanted to put good quality IT systems. Technology is no more an option. It's a hygiene factor. If you didn't have the basics, you can't even start a bank. So I went and checked out and they said that the minimum that is really required for putting up a good tech system was 200 crores. And our net worth was only 130. No clarity in terms of how you really go about it. But having got an in-principle license, you don't want to even surrender it. You want to kind of go your steps and then you figure it out. And when we kind of explored, then ultimately we ended up with checking out and 3-4 of us together. Then somebody, I think Ravi was mentioning cooperation. And I think what we saw was while 10 of us got, 4-5 of us got together and said that why don't we really kind of speak to a vendor together. So while we are competitors on the field, for anybody kind of looks at us, they think that probably we all belong to the same group and just that we floated 4 legal entities to get 4 licenses. So we kind of reduced we discussed, negotiated, and finally we settled on a fraction of what would have been the price. So step by step, kind of when we kind of built it, what we realized alongside was the ecosystem was also fast kind of coming off. Probably India today has got the most advanced payment systems in the world, and we have approximately around 220 crore transactions which happen through UPI. Small value transactions, averaging around 2,000 rupees a transaction, 220 crores. Your maid, your driver, their kids, quite a few of them have got into this platform of UPI. So this eco change was happening parallelly while we were all setting up our bank. So in terms of a cost structure, each one chose to do what were the kind of the way in which we wanted to set up our institutions. So I do believe even today that you don't really need to start a business with a aim that you will have to spend and then start earning. You can always earn and then start spending. Of course, it's a little longish process. It is not probably more fashionable, but banking nevertheless should never be a exciting fashionable business. Both, I think, I'm told even investing should not be very exciting. It should be probably solid and tend to become little boring. So we built this entire eco structure, and as we are kind of building it, what we are really coming to realize, we thought we knew our customer segment, small ticket customer segment, low end of the economic cycle, is that while they were not digitally very savvy, we were catering to the women of the household. They were probably not financially digitally savvy. They were digitally savvy to the extent of using WhatsApp, probably SMS and a call, but they were not. But the household, because of all the ecosystem generation, has already become one. So they were transacting through Google Pay, Phone Pay, and prior to that, probably Paytm. So they were kind of far ahead than we thought that they were in the curve. So as we kind of put in the exercise, what we realized is that while all of this is happening, what is not happening in a coherent manner. And the logic that why they have money, why they borrow, is not necessarily true. So we have borrowings, we have also savings. They coexist. The purpose of that is very, very different. Well, that I think easy on a theoretical basis, but we get into it. If we're able to build both of this in terms of a financial inclusion, then our risk management itself becomes far, far superior. Any customer who has got anybody, for that matter, is financially stable, their behavior towards credit, their behavior probably even towards their social behavior is very different when they are not really sure in terms of what is it for the next day. the number of crises that they meet on an ongoing basis, which would have seen during demonetization, would have seen during this pandemic, is that for them it is hope leads to courage, to faith, and life goes on. And they come back very, very sharply. Even including the pandemic, which we saw, that many of us are locked in and working from home, our business did not really truly give us the luxury of sitting and operating only from home. We had to meet our customers. We can be digital, but we still have to be partially physical and in person, meeting up the customer, interacting. We saw the huge spurt in terms of COVID infection even within our employee force. We have 4,500 employees. We had around close to 170, 180 of them getting infected in the first few months, probably April, May, June, and we had the peak. But what has happened? I'm not sure, but the infections have fallen off almost virtually closer to zero in at least our employee segment in the last 4 months. We had only 3 cases reported, and given the average age is less than around 27, 28, fortunately, thank God, they all have recovered. But the infection has absolutely become zero, and we are interacting with the customer going into uh, probably a little better than slums, or slums interacting with the customer, servicing them. So there is some kind of a resilience. Philosophically put, that resilience is also showing up in the way they are bouncing back much faster than many of the middle level companies are coming back. The SMEs probably are taking little time, and within the SMEs, probably the lower end of the SMEs are coming back faster than the middle, and the middle is probably coming back a little faster than probably the little larger ones. Of course, the very, very large ones are far more stable. So as we kind of build in, what is really coming to light is that we are a small bank, very, very small in terms of assets, 6,000 crores of assets. But what we cater to is around 15 lakh customers. And in mathematical sense, you'll have to multiply the number of people in the households of 15 lakh households. It's around 75 lakhs, which is technically, statistically speaking, 1 out of every 200 Indians I see on the road is a customer of Suryoday Bank at this size. And the next step is that if only these households, which is 15 lakh households, become financially meaningful, and all of them are aspirational, their income jumps up much faster for the simple reason that let's assume that a combination is a maid earning around 8,000, 9,000 rupees in Mumbai or Chennai, and husband is a driver earning around 12 to 15,000 or 20,000 rupees. And one of their sons or daughters get into a job, and once they are in the job market, the income goes up another 15. So there is a 50% hike when that happens, and the household income by and large is in the range of around 30 to 40 to 50,000. What is not there is that a meaningful saving happening on a consistent basis is what is a missing piece. If we can put all of these pieces together, and that does not happen, if we expect the customers to come to the bank branch, which is where the doorstep banking happens substantial and will continue to happen for some more time, till such time all of us make payments to our maids, to our vegetable vendors, to our drivers through the digital mode. So as long as that one side of that is still continuing to be cash, we still need to be catering to them at the doorstep basis. So we are building the bank. It's really, really exciting. Multiple challenges. We went through the demon phase. We were kind of going through the pandemic phase, lockdown, working from home. But the switchover, like happened across all the places, has been very, very smooth. A really, really exciting journey as we are getting ready to do our IPO in a couple of months' time. And alongside, we have kind of built part of the entire culture was in terms of paranoia. You can't really take anything for granted. More so when the going is good, you'll have to be extremely careful, because things look good and then suddenly you have chop one incident and then everything is almost back to where we started, say, 2 years back. The ability to kind of bounce back, spring back, and then to put all the rails together as we really expand is what our focus is. Large opportunity. One of the key things which many of us have multiple banking relationship, wealth management, many of you. But the fact is that not many of us have a bank which we love. So that space is absolutely open. Says that, hey, do I have a bank which I really love to deal with? Usually the answer is no. Because banks have been built to sell products. Banks have not been built to buy products for the customers. But the opportunity is really, really large. It takes time. Banks don't get built in a day's time. They don't get built in 2-3 years' time. They take minimum of 10 to 12 years to kind of come to infancy, and another 10 to 12 years to come to something meaningful in size. But if there is the space which is still waiting, where if any bank for that matter is able to cater to in a meaningful manner, cost effective, you can't be giving products which are expensive and expect people to be loyal. Loyalty at any cost is thing of the past, but loyalty, as long as you give service and you're transparent and you're clean, you don't really need to today build bank branches physically. just the way of credibility takes us to places. One, the force multiplier is tremendous in banking, built on tremendous amount of trust, which is what I think we have tried to do in the last 4 years. We are 4 years old or young as a bank and 11 years old as an institution. So kind of getting to do it. It's been a good entrepreneurial journey. The key challenge which we all face as we grow is not so much about the business or the opportunities, but in terms of getting the right team, the team that can kind of know, and our ability to translate and communicate the vision. This is a 5-member team, 10-member team. It was just fabulous. You kind of thought, and they really did the same thing. But as we really grow into size, those I think the people management seems to be the far bigger challenge, and not managing people, but kind of getting them aligned. And then once we're all even 10, 20 are aligned for the same vision in terms of what I would like to kind of create. When we started, we wanted to create a million millionaires, Indian million, which is 10 lakh rupees. So while we have achieved the 1 million customer, we are far off from creating those 1 million customer into millionaires. And as we kind of grow in size, what is probably visible is that the 1 million can become 1.5 million, can become even 10 million. But are we really able to meaningfully impact them and consider that you achieved a purpose or built an institution? Probably a couple of years. The day in which we do that, I would think that we have really built something very meaningful. Look forward to doing that. And in any ways that you can support by becoming a bank customer, I'll be delighted. Thank you very much.
Thank you. Thank you so much. I think you covered a lot of ground. Some people couldn't hear you, maybe because there was some distance between you and the mic. So are you able to take some questions? Because there are questions that have come up for you.
Yes,
So
Vijay.
I'll just start the ball rolling. You spend most of your developmental career with the large entities, and then you move to this, which in the ecosystem of banking and finance is a different category altogether. Most of our members are in the medium and small business category. Conventionally, everybody knows that the large banks in this country, mainly the nationalized banks, are more skewed, more slanted to servicing the big corporate entities. They are the preferred customer base. And though they have agenda to reach out to everybody in this issue called financial inclusion, reality is different. All right. I think during the pandemic, this surfaced even more. Do you think, because yours is still a new growing entity, eventually, and with progressive thinking from RBI, because I think you need RBI also to help develop a framework that you all can go forward. Do you think this will evolve? No, we have, for instance, Mr. Prakash Challa, who was a banker. He started his career in banking. Now he's in infrastructure and real estate services and development. So he's somebody who has seen both sides of the coin. So I'm just putting this to you. All right. We are a mature audience. So do you see this really happening? This is what is important. That there is a question actually raised by him is, why do you think the customer is irrelevant as far as the banking services are concerned? I think you mentioned it in your speech. So the issue really is this: if customer were really to be prime, customer is the main purpose, how will this actually be translated? This is what I think business owners, services all want to see. So
it was Hemant's question.
Hemant's question, yeah.
Mine is different, yeah.
So Mr. Babu, go ahead, please.
Yeah. See, there is no dearth of money chasing. So we have only the entire banking system of ours is only 100 lakh crores. And our GDP at nominal is almost double of that. And any meaningful country to economically grow, or statistically at least, the bank credit should be equivalent of GDP. So which means the bank's credit has to grow 100% from where we are to kind of reach any meaningful scale. So what probably has not happened earlier is that because of the nationalization, multiple other things, it was assumed that when you're taking a loan from the bank, the very fact that you have to repay every rupee of that was somewhere missing as a society. You kind of took it if you're able to pay fine, and otherwise no, you kind of left it. So either because of the fractured way in which the structure was operating, Either nationalized bank were operating in a different silo, private sector bank was completely risk averse and hence were more focused on retail. So there was no exact match in terms of the SME funding. So hence it has never been meaningful. The new entities are really, really focused on it. But the fact is that each one is busy into their own segment. So somebody has to really fill in and to do that missing middle. And that I think you would have seen in this pandemic, one good thing really happened, which I'm sure the government can take it multiple steps forward, is the ECLGS scheme. The government guarantees, and you don't need to guarantee even full, but that was possibly for just the pandemic impact. Even for 20-30% meaningfully done, and there has to be skin in the game for the banks. And those are the banks, then the new age banks which are really coming up, then can really focus on it. I meant irrelevance in a different context. I said that overall as a society, if the gap between income or specifically between the wealth is very, very large, is that we are asking for disaster. You can't live in a superb apartment surrounded by slums. At some point, it's going to really create a turbulence across for everybody, including the wealthy. So more and more people feel irrelevant because they're not neglected, is what is really not good for the society. And certainly that is happening in the financial space, the banking space, which I think the new age banks is what will make it more meaningful. So that was my context in which I said irrelevance.
Is microfinancing still one part of your business? I mean, the small, individual borrowers and people in the rural areas. Does that continue to be a business segment for you?
Yeah, it does, but our microfinance is not rural, it is urban. Even in financial inclusion, generally it was assumed that financial exclusion is more of a rural and not of an urban. I think it is more pronounced in urban localities than in rural. We are urban focused, semi-urban focused. So we still have 60% of the portfolio, but earlier we used to look at only microfinance in the customer household. Today, the customer household requires a home loan, we are there for a product. If they need a commercial vehicle, we are there. So there are two ways in which banking can be done. One is a product driven, or go back to the old style, which is customer driven. So we are, I think, coming back in one whole wheel back into where it was. It is going to be customer driven, they're just going to be product driven. Because of technology, you can deliver all the products that you want to the same set of customers without running verticals.
See, there was this issue with this term financial inclusion. If financial inclusion was seen only as opening n number of bank accounts to cover every individual in the country, in theory, they could have well used, for example, post office savings bank, which to me should be able to connect with everybody because the post office everywhere, rather than, saying every bank should be doing this. So is there a mismatch in policy and expectation between the banking authority and what you in industry would like to do or should be doing? It's just a question.
I think the efficiency for various is privatization brings in, or private sector brings in lots of efficiency, effectiveness, and more importantly, they look at wherever the opportunity exists. So you don't neglect of something because somebody else has not done it. So exactly 100 years back in 1920, an Italian immigrant, when he saw his own relatives or friends being shooed away because they were too small, and he was a vegetable merchant. He was not even a banker, he was not even a financial services professional, started a bank called Bank of Italy on the western coast, and which then became Bank of America. And the entire focus was that only small customers. So this is not something new that which happened in India, even in an advanced country like US in the 1920s, when it was all in the East Coast, blue-blooded Wall Street bankers. It's just a vegetable merchant who created Bank of America, which was focused till he was there. It was focused only on small customers, and the deposits was only 5% of the average of deposits of any large bank. So this segment, which is very, very large, just neglected. Nobody picks up the opportunities because you have enough to do. So the other reason is that when you have enough of a growth, you don't really look for newer opportunities. You don't really try to fix which is not broken, probably. So this is where I think the newer ones see a lot more opportunities, and you will see that really happening in a massive scale. I would say that currently all the small finance banks constitute just 1% of the banking assets. Probably in 5 years' time, I won't be surprised if it is 5% of the banking assets.
I have a query here. Prakash, I may have missed your question. Would you like to pose it yourself?
Yeah, okay.
Go ahead.
Bhaskar, it's a fantastic journey what you had in your career so far. Very happy. In advance, probably I need to congratulate you for the upcoming IPO. And I'm sure that probably to the BBG members, you might want to give us some shares also at some point of time, whatever it is, because there'll be quite a few investors. You are speaking to people like Ravi and Hemant and others. Okay, my couple of questions I have. Basically, I started off saying that what is the average cost of funds for you in the small finance bank? I have another question is on what is the basic difference between a small finance bank and the normal nationalized or the private banks you have? And a third question is on the actual interest rate a customer pays under the microfinance. Please go ahead, sir.
Yeah. In terms of the cost of funds, obviously because of the solid liquidity, it has been coming down very sharply. Currently, we are kind of averaging around 7.5% in terms of cost of incremental borrowings. The overall weighted average continues to be just sub 8, around 7.9. For a large private sector bank, it will be sub 4. So you kind of have the 400% basis points gap because we pay a little higher rate of interest than the regular bank, and our CASA, which is a low cost deposit, is much lower. It's around 10%, not 40-45%, which will be there for a regular bank. In terms of the difference between what we are and what is the universal bank, just the difference is that we'll have to have 75% of a portfolio in private sector lending. For the regular bank, it is 40%. Because what the regulator wanted is that we didn't want to kind of breed another set of banks which were again focused in terms of large ticket lending. They said go small, dig deeper, be direct to the customer, and then show us innovation in which we can do cost of lending at a much lower rate. So it takes us to the next question. So which means that obviously we also all have an opportunity to apply for a universal bank in a year's time from now, when you would have completed 5 years of operations. Not much change except that we have to put small finance bank as part of our name, which usually used to confuse when we kind of were very, very young. So now I think broadly there is an acceptance, and the deposit insurance now is 5 lakh rupees per deposit, and in a household of 3, you can put as much as 75 lakh deposit which will be insured. So that I think we've taken care, not necessarily a disadvantage now. In terms of lending cost, so currently it kind of is around 20%, around 18%. It is split into two, you'll have to do that. For instance, if I have to split that in terms of a cost of servicing per transaction, if I take out 25 rupees as a cost of transaction, the interest rate will fall to 14% or less than that. So since it is small value, so it becomes extremely difficult. There's one question where if somebody asks you, become so defensive, you said, what is the difference between you and the money lender? You're operating at 21 and 22%. There's only one small difference. I kind of keep telling people to the extent that's possible, hopefully convince some, is that when you go to a restaurant and have a small restaurant, and you have a coffee and it costs you 25 rupees, you don't leave a tip of 1 rupee. You still leave a tip of probably 5 rupees, or probably many times it will be 10 rupees. So 10 divided by 25 looks like to 40%. But the fact is that you have spent 150 rupees, you will probably leave still 10 bucks. So the cost of servicing 10 remains the same, but you start calculating as a percentage, it becomes high. But what we have a responsibility is that we can't still operate at the same rate as the loan ticket size goes up. If I'm charging to 18, 19, 20% for a 20,000 rupees loan, because the cost of servicing is high, the moment that 20,000 becomes 2 lakh, usually we always get the temptation of why reduce it when the customer is willing to pay and so on. That I think somewhere is where we'll have to really bring in. And that I think is what you'll start seeing it happening. I never have enjoyed as a customer a OD limit with a bank. But 3 lakh customer of ours have a OD limit varying anywhere between 10,000 to 20,000, where I charge 18%. They draw out and they pay an interest only when they use it. The cost of servicing is pretty high. But I said that one of the reasons why we'll have financial inclusion happens is that when I have a limit and I can use it when I want, the confidence I have is very different from reaching out to somebody only when I need a loan. Many of us salaried class don't have this opportunity of, except for a credit card, we don't have a limit where I can use it when I want to and I can repay when I have a surplus. So as we kind of grow larger, I clearly see that we should operate probably at a rate same as any regular private sector bank will operate for individual customer segment. Probably 12%, 14%.
So is there a cap for you for the maximum lending you can do to a particular client or something like that?
No, 50% of our portfolio has to be for loans of 25 lakhs and below. And for even a large private sector bank, 50% of the portfolio will be 25 lakhs and below. Not a constraint.
Okay, thank you.
Thank you.
Ravi?
Yeah.
Questions, please. Go ahead.
No, Bhaskar, I think first of all, congratulations as the transformation from into a bank. I think that's not easy. I think that's a journey, and I think based on what I see, I think you've done excellently well. And as Prakash said, congratulations on your upcoming IPO. I see that a lot of your focus on technology, right? And I think so you see that as technology being your, I guess, your strong point, and reaching out to this, and particularly for younger generation customers who are coming through. What are your thoughts on reputation, right? And obviously, when it comes to cyber and when it comes to small users, and when you have a lot of digital infrastructure, what are your thoughts on managing your own reputation as you go forward, particularly reaching that? Because you can gain a lot of these customers, but reputation is everything for a bank, right?
Earlier, reputation risk was more in terms of financial management for a bank. Now, the biggest reputational risk is cyber risk.
Yeah.
Humongous. Kind of somebody, I think one of them said, each one of us have been hacked. Just the fact is that some of us know and some of us don't know about it. So that's the kind of risk really we live with. So as we kind of started, I knew that this is going to be one of the largest risks that we'll have to kind of manage, and the cost, the investment required is humongous. So we went with FIS as a partner. It's one of the largest, I think, top 100 banking technology firms in the world. I think it's a Fortune 200 company. So we said that, hey, kind of dovetail our reputation to their reputation. Let them manage the entire cage, cybersecurity and all that. We will not have the wherewithal to manage it. So that's what we did for the first 4 years, and we'll do it for probably the next 2.5 years, by which time we'll have to kind of our ability to really build or lean on it. As I think you only mentioned, Ravi, I think what's happening is that I think it may not be really necessary for all of us to develop all the capabilities ourselves. If somebody is too strong, align with them, and then kind of, I think more than non-alignment, now it's in alignment, which makes more sense. So just align yourself with somebody who can kind of manage your risks, because the kind of investments, or not just the investments, the ability to see those risks is very, very limited, because the risks emanate almost on an hourly basis. What can happen? The biggest risk, as somebody said, is that what happens even if the US Treasury bills kind of where they're stored gets hacked. Multiple things can happen, and that's the biggest risk we'll have to live with. And further, the best is to, as of now, what we've done is that align with somebody who's very large, whose reputation depends on managing your reputation, which is how we've taken the path for the first 4 years.
Good, thank you. How easy do you make it for someone to borrow that 20,000? And how long would it take for me if I want to borrow 20,000 from you? Like your OD facility. How easy is it? If I have a mobile phone, what's your user experience is like, and how much of your focus is on that user experience aspect of it?
I can't believe it myself. So what COVID has done is that it has accelerated that like crazy. Today I can set up a OD account for an existing customer in a minute's time flat. This may be a little bit of an exaggeration for impact, but no more than 3 minutes. So meet a customer, Aadhaar, authentication. We don't store the Aadhaar, so no privacy issues and all of that, which is overplay. But existing customer walks into my branch and then kind of gives, I have a preset limit at the back, and then the customer can just go out and then withdraw it the next second, which is kind of what we want to kind of deliver. If somebody needs it, can I do it quickly? Not the fintech model, which kind of just kind of keep giving and responding to meaningful loans at the fastest speed with no paper. And that backbone, I think, has happened out of the Aadhaar Jantan and the mobile basis. So as I call it, JAN. So today it takes 3 minutes for an existing customer. The new customer probably takes a day in terms of meeting up and then setting up the limits and making them a customer. Once a customer, my take is this: we're going to take a little more to get somebody on board, but once on board, give the customer the best of experience. I can broadly tell that my customer gets a far better experience than I can get in our own bank.
Yeah, that's important. Absolutely.
Right. Any other questions? Otherwise, I think we will would like to relieve Mr. Babu. He's been very kind to spare his time. Thank you. Thank you so much, sir, for coming online, sharing your experiences. I do hope that businesses like your good friends Hemant Srivatsa, who often discusses banking and finance issues with me, that he becomes one of your better customers in due time. If he isn't already one, I'm just saying this tongue in cheek, all right, and that all of us do as well. I'm not going to request. Hemant is unable to speak, so I'm saying it on his behalf. So I'm not going to request Vikas. Is Vikas there? Vikas Chala?
Thanks, Vijay.
Thank you so much.
Thanks, Baskar.
Vikas, if you're there, can you just give a vote of thanks, please? If Vikas is not there, then then I have to thank all of you. All right. So let me do the honors of doing the last bit. Thank you, first of all, for all of you who logged on. We always have a challenge when we organize these meetings over Zoom. All of us know there is something called a Zoom lag, all right? And despite the Zoom lag, if you have stayed on, very happy that you have done so. Thanks to